All right, what is going on, everybody? Um, Apologies, it's been a little while since my last video. I went to travel to see some family for the holidays, and I ended up getting sick with the flu. So I was just roughing it for the last week and a half. Um, so I just didn't have the energy to post and do these breakdowns, but I'm feeling better now, and I just want to run through a couple things today. First thing I'm going to do is run through my last few trades of the month, and I also want to talk about how I deal with drawdowns, slow months, and poor performance, like on my end, because this month was really challenging for me. Um, I guess as I've been learning, my most challenging thing has been patience during slow months. I tend to overtrade and start forcing setups whenever things aren't working my way for longer periods of time. And um, I've noticed that in myself. It's been a reoccurring thing, and that happened this month. I took after a week and a half of no trades. Like, this month was quite slow for me. I started forcing some setups, and I was sitting in drawdown this month for a little while, but I pulled back and ended up in good profit. But I just want to tell you guys how I deal with that, and on a risk perspective and on a mental perspective, and hopefully it can help you guys a little bit. But I'm gonna break down my last few trades real quick. First one I'm gonna do is GJ. So after we ran pretty significant buy side liquidity, we started shifting market structure back down. We had a sweep here, break a structure. We came back up, swept liquidity, broke structure again. This is going to be my range here, and this is going to be my internal liquidity from here, here, and here as well. So this was I think last Monday, a week ago. We had a clean run on buy side liquidity of the larger range into this order block here. These last series of up candles before the down move. We ran the liquidity during London, and then during pre-New York, we were sort of consolidating, and then New York Open, we swept the high and then broke structure down again, leaving this fair value gap. Clean space to work with here, so I went down to the lower time frames. Again, we had a sweep, break a structure. We have inducement liquidity here, internal liquidity. I wanted to see this get ran, and then I entered at this order block right here that was being sponsored. Entered there, and this was a break-even trade. How I managed was break even after the model follow through. I have my TP 1 to 4 set here. This is my this is where I take majority partials, and yeah, just didn't reach it. I believe it just held the 1 hour fair value gap. It needed to go higher, which is all right. I executed and managed properly, and that's all I can do. This one just turned out to be a break even. Next one I want to go through is S&P. I took shorts on here. Similar scenario. We have our higher time frame range right here. We ran very significant buy side liquidity. All these highs. We have a point of interest in here. Once we reached into this point of interest, we got a sweep, break a structure, another sweep, break a structure. So this is my most recent trading range. This is my first point of internal liquidity right here. And on Friday the 18th, we had a fractal, we had a clean run on buy side liquidity, tapping into this point of interest. From here, we had let me go to the 1 minute. Once again, we had a sweep, we had a break of structure, we had inducement liquidity right here, internal liquidity, and this order block. Very simple stuff. We had a run on the inducement, mitigating this point of interest. I entered, and this was a beautiful trade. I think it continued running all the way down to these lows, but yeah, so how I managed, again, model follow through. This is where I go to break even. I took partials at 1 to 4 right there. And then I believe I just pulled at this order block right here. Nice little 1 to 7, 1 to 8, roughly. I hope you can see the similarity in the trades. Same thing over and over again. But let's go to the next. This is Euro USD. Let's go to the higher time frames real quick. This one was just simply set up. There's no real structural confluence here, but we had a major run on buy side liquidity here. Tapped into this series of up candles, this order block sponsored by liquidity. Yeah, during London we had the run, and then during pre-New York we had a run on London highs. This is indicative of something, especially whenever New York opens up within this liquidity. But this for me was simply a pullback play for potential London continuations, daily cycles. So once we had a run on London buy side liquidity, we had SMT divergence right here where the dollar index swept and then broke structure. So that is how I was viewing this. Even though these were equal highs, there was divergence, so I'm willing to take this trade. I entered this on the FVG because that is my plan for this entry model. And I pulled my full position here below sell side liquidity right before news. And as you can see, it was a good call because news absolutely rinsed this. But yeah, that is my next trade. And really simple stuff, guys. There's not a whole lot else to say. I mean, we had a clean purge on liquidity, get our entry model. We're within a point of interest on the higher time frame, and I take the trade. Really simple. Next one. This is today. I took 2 trades. I took 3 trades. Sorry. So this is the first one on GBP CAD. Again, this is just simply a setup. No structural confluence here. We just had a clean run on buy side liquidity. Major highs right here. And we tapped into this weekly hidden base. This is a larger model here. We had our 3 runs. From here, I can look for a shift in market structure and then a trade down. I've gone over this model before. So today, London had that purge on liquidity, mitigating this point of interest, and we had a 15-minute shift in market structure. My first trade was at the fill, the 15-minute fill, right here. I got stopped out of that, unfortunately, but this was valid to my plan. We had buy side liquidity sponsoring the fill, the SMS. This high technically should be respected, but sometimes it does get poked through, which is all right. So I took a pretty instant loss there, and then as soon as this high got induced, I saw we were failing to continue higher, and after the shift in market structure, I knew this order block it was unlikely to hold, so I entered once we got a little pullback into this order block that we created. Series of up candles immediately consumed. I entered there, and my management here was after I saw a respect of order flow. From there, I went to break even. I got my 1 to 4 partials right there. This one I actually managed a bit differently after we reached sell side liquidity. These highs, the lows were it's failing to create lower lows. The lows were holding in here. So I ended up taking partials right there. And I took my 1 to 4 partials around right there. And then I proceeded to take more and more partials as the trade went on. It turned out just to be a 1 to 4 total profit, but I'm okay with it. So this is -1 +4, And then immediately after, I went to go check the indices just to see what they were doing because it was 9:30. And I saw this on NASDAQ. So this is my higher time frame range. We had a run on buy side liquidity. We reached into premium of the range and we mitigated this point of interest here. Once again, we broke structure. And from here, this is still our range because we have not had a follow through of the lows. This low failed to get taken, so the high is likely to get targeted, which is exactly what happened. We reached into this fill here and then proceeded to respect it and started trading back down. Over the weekend, we had a gap here, and these gaps are likely to get filled and either respected or disrespected and respected on the other end, similar to an FBG. So today we had a clean run on buy side liquidity into this gap fill, and once we reached the fill, we had we got our entry model. Again, this is going to act as a point of interest here. So once I saw that we purged liquidity and we started failing at the highs, I wanted to get in. So this was the entry model right here. We had a sweep, mitigation, break of structure. This was inducement liquidity right here. So I decided to enter right above this high. I had a feeling that I wasn't going to run this. So I entered above this inducement liquidity, still valid for me. And I entered right there, and then thing just absolutely sank. And since I already reached my risk limit for the day on GBP CAD, I entered this at half risk, and I just took my 1 to 3 as a little gift, and I called it for the day. That's all I wanted to go over for that. And now I want to talk about dealing with drawdowns during your month or just slow months of price action, and dealing with periods where you just don't perform your best, which is very likely to happen in your career. It's normal, it happens. All you can do is learn and grow from it. But this month, I started off with a really nice win. I had really great momentum in the beginning of the month, and then I proceeded to take like 3 or 4 losses in a row. That put me in drawdown for the month, and then I just sat in drawdown for a week and a half, and then I took another loss. So I was in drawdown for a majority of the week, and then the last 2 weeks I started gaining confidence again and just taking my small wins, building up my account again, and then finally today I ended off nicely with a good 2 wins. But sorry, this is what my equity curve looked like this month. I was sitting in red for a while, and it can be really frustrating, especially when you have to pay your bills with this. But you got to understand that your edge is going to play out over the month. You can't be focused on these individual trades here, because that's just not how trading is. I mean, unless you're scalping, these small little trades, like it doesn't matter on a month-to-month basis, on a year-to-year basis, on a quarter-to-quarter basis. You got to be focused on the bigger picture and where you end the month off each month. I'm not focused on any individual trade throughout the month. I'm focused on where I end, because stuff like this happens where you can go 28 days with no money seen, and then you can make 10% in a day. And yeah, so I guess what I do during periods of drawdown, I definitely take a step back. I trade a lot less, or I try to at least, and I drop my risk. I drop my risk until I start gaining confidence again, until I start only executing A+ trades, because Sometimes if I'm sitting in drawdown for a long period of time, I will start forcing trades to try to make this back up, and I will just end up losing money. So I know that I do that personally for myself, and so I drop risk because yeah, I just know myself. And over time it's good to understand your weaknesses and your flaws and where you may sabotage yourself, and um learn about yourself and figure out what to do from there, essentially is what I'm saying. It's really helpful, and it's really good for managing your accounts and keeping them over time. But um I'm not an expert at this. I really struggle during slow months. I overtrade sometimes and I take stupid trades, but it's getting better over time. And what has helped me is reducing risk during these periods of drawdown, just because I know there is a possibility of me doing this right here. Until I start gaining my confidence back again, then I'll start upping risk and getting back to my normal position. But this is how I deal with drawdowns, slow months, and whenever I'm performing poorly, I have to take a step back. I have to review my trades. I have to look at my winners from my last month. I have to sometimes I need a day or two off, and that helps a whole lot. And I'm constantly back testing, which I'd love to make a video on later, but I keep grinding, I keep hustling, and it's a never ending problem solving and puzzle to solve. So personally, I don't stop for too long. I know a lot of people like to take, a week break if they're performing poorly, but I personally don't do that. I just reduce risk and then continue trying to do what I do. I hope that helps. I guess the main takeaway there is to learn how you sabotage yourself personally, and build barriers around that and figure out how you can keep yourself from wrecking yourself with your sabotage behaviors. For me personally, again, it's over trading, so I reduce risk during these periods of poor performance, and that has helped me significantly. That is it for today. I hope you guys have a great week and a great rest of your month. I will see you later.